It is Wednesday, the 11th of December. I hope everyone's doing okay. We had CPI inflation data from the US today. It all came in line. No surprises, no nasty surprises. The market liked it. So we saw a really nice bounce in stock indexes. They recovered from the little shakeout, and we've seen a really good bounce in a lot of crypto assets as well. The thing that's troubling me is the last time we had a really good pump in Bitcoin, the one last Wednesday that took us over 100,000 and everybody cheered, Microstrategy didn't follow through, and it made a pretty bearish pattern, a pretty bearish ABC 50% retrace pattern. And I'm a bit concerned that here we are pumping in Bitcoin again, and we've got the same thing with MicroStrategy not performing, underperforming, and bearish pattern. And the same thing in ETH as well. Now, ETH has underperformed Bitcoin for a long time, but MicroStrategy normally overperforms, 3 times. So I'm a little bit concerned that maybe the chop for December continues, and that perhaps we have not got the big bullish reversals that we are all hoping for. There have been some really good bullish patterns. Solana, Ripple, and a lot of altcoins have really nice bullish patterns as well. But it's kind of one of those markets where a high tide floats all of the boats, and they will struggle if the bigger picture sees a bigger pullback. So let's take a look at what I'm talking about. First of all, let's talk about Bitcoin, because here we have a really nice spike higher in Bitcoin. Here we are back trading above that $100,000 level, still in a sideways zone. As you know, I think our big kind of fib target was 102,000, which is where we couldn't close above before. We had a look, but we couldn't kind of hold above it on the daily and continue above it. And so I'm just a little bit worried that this is a little of a bounce and a sideways chop zone. And again, whilst underneath, I think holding above 100,000, I would really like to see much more bullish sentiment at this point, to see some follow through. And if everybody is using this price point to short MicroStrategy, we could have some headwinds. Here was our big rally last Wednesday, Thursday that I'm talking about. And if we look, this is a daily chart. Let's go down to the 4-hour of MicroStrategy. And last Wednesday, Thursday, here was our big bearish reversal at the end of November in MicroStrategy. And this candle here, was last Wednesday, Thursday. And you can see that this rallied in a textbook ABC. I'm just going to get rid of that Bitcoin overlay. This rallied in a textbook ABC 3-wave measured move back to the 50% from this high to low. That's a typical bearish pattern. And so this here was a textbook short level for me. So what we've seen here is a 1, 2, 3 up, a 1, 2, 3 back. And normally, these, when you make these 3-wave patterns, so we've seen a big 1, 2, 3 down, 1, 2, 3. I think that this is all sideways and corrective and really underperforming. And if we bring it down, so if we look at this most recent rally we had, here we are kind of in the middle. I think if we can close more than 50% up here, I'd be a little bit happier. And so it's going to be about where we close. And that price point in MicroStrategy is 400. A close above 400 might see us make a bigger 3-wave pattern. And if we were to do that, I think that we could rally to 463. So here's our first swing higher from this low to high. 1, 2, 3, 1, 2, 3 back, and we would repeat it in a bigger ABC, and that takes us all the way up to 463. And if we look at bigger retrace levels from this high to low, this first swing would then be to the 50%, this would be to the 61.8. So the 400 level is pretty key for MicroStrategy. If we can hold above it, we should see more upside. We'll have some wobble levels at 416 and 440, but really the bigger measured move target into year end would be 463 next, 463.95 for MicroStrategy. And because it's underperforming, it just makes me a little bit nervous about Bitcoin. Another one that's underperforming Bitcoin has been ETH. So it isn't kind of confirming the really bullish patterns that we've had. So let me take everything off. Oops, that didn't do that very well. So if we take a look at this, whereas in a lot of other markets we've seen very nice three-wave corrections back to moving averages that we can buy, what we've seen here in ETH is a really nasty sharp drop on the daily. And when you see this pattern, when you have a big up candle followed by a doji or two with a bearish reversal that closes more than 50% down, that's kind of a bigger candlestick reversal pattern, and this 50% back of this nasty drop becomes important resistance, and by that I mean the candlestick. So that is a little bit higher than where we are. If we look at this though, from high to low, measure where we are, so let's take that off in terms of the candlestick. I'm going to go down to a 4 hour because we're kind of repeating that bearish pattern that I just talked about in Microstrategy that we saw when we had the nasty drop last week. So the 50% retrace of this high to low is here in ETH dollar at 3,790, and if I measure from the low, let's do it like this. So if I measure from the low that we made on the 9th a week ago, like this is our equal measure move. So this here, this is a reversal zone then, exactly like that really nasty one last week that gave us the pretty strong bearish reversal. I can't find mine, there we go. So right here, between 3,790 and 3,810, we've got a pretty nasty potential bearish reversal zone in ETH dollar. So I'm watching these levels. I'd really like to see ETH push through this. If everything, we kind of want one of those high tides that float all the boats. And so potentially we're getting a little bit close to a reversal level and today's bounce will be over. Not everything has got these nasty bearish patterns. If we take a look, my favorite two charts and the ones that I bought last night were Solana and Ripple. And the main reason I bought Solana and Ripple is I could see really nice clear patterns to buy back to. I talked about Solana, a big pullback to the 236 fib from the 2023 low, and this lovely three-wave pattern. And if we look at it on the 4 hour, this is our first swing lower, here's our B leg, sideways in the middle, and here's our third leg, and we have seen a really nice bounce. However, we are at a little bit of a worry level here. We are back testing these moving averages on the daily. We're back testing the daily 20 moving average, which is a little bit nasty support and resistance usually. And so potentially this may be it for today. If we continue, I've drawn this as a channel. If we draw it as a parallel channel, you can see this would be the top of the parallel channel. So that would be our second target if we can break out above this daily 20 moving average, which is at 229. Third touches, when you draw the trend line like this and you're looking for a breakout, third touches of trend lines like this are very often the first time you tag them a bit of a false breakout or a wobble. So if we were to close above this daily 20 moving average and get up here, for me to stay long, it would be really important that we keep holding above, for a swing trade, it would be really important that we keep holding above this daily 20 moving average and we don't fall back too far. Ideally, I'd like to see us break out and then pull back and go sideways around this trend line. But don't be surprised if we do that. And then obviously if we break out from here, the next trouble area will be a retest of the highs, and then we can look for measured move targets and new highs in Solana. And we could also say that we're in a fifth wave. So this is how I'm going to measure the target. So if we go from the August the 5th low, this is wave 1, 2, this is a big wave 3, and we've done a wave 4. This next swing should have a mathematical relationship to this first one. So if I measure from the low to the high, project it from this low, the equal measured move would be a retest to the high. I think I would like to see 290 for a target next. That would be where this fifth wave would be 1.618 of the first wave here. And 343 would be where this swing is 2.618 of there. Now, obviously none of that comes into play if we can't make a new high, and sometimes, you know, we could go sideways in a longer wave 4, but if we look at how long this wave 2 was here, really it shouldn't go too much longer than that. It may be that we need to wait until the beginning of January, and we might end up doing a little bit of sideways dance in that, and until then. So that's the long in Solana, and I'm watching this one tightly just because of the potential for bearish reversals in Bitcoin and other markets that drag everything down again, and volatility. So the other one that I really liked was, which for me was a really clear pattern, was Ripple. So let's talk about Ripple. Again, in this one, it was really clear, lovely 3-wave pullback to previous support. And if we zoom out, we had a bunch of target levels. And this was the previous equal measured move. If we measure from the low in July in Ripple, this was our wave 1, 2, 3. So we're looking for a wave 4. We really haven't done very long compared to this wave 2. So it might be that we need to go sideways a bit longer. But you can't argue with what a lovely 3-wave pattern this was, and a bounce from the daily 20 moving average. So again, when you have, and we can also see that this middle pattern section here was 3 waves as well. So sometimes that puts me off. It's just one swing. So when you have a 3-wave measured move like this, I put my fibs on both swings from high to low, and I literally kind of trade level to level. Let's take some of the noise off this chart, tidy up a little bit. Hold on. So here we are sideways at the 50%. I'm going to first off say the kind of confirmation that we were going up came last night when we got above this 236 fib level here. Let me make them darker so we can see them. Here we go. Here we go. This 236, 2.13, and this 38.2 we got above. It became support. This 50% that we poked above, and we kind of need it to be support on the close, you know, otherwise I'm just riding this level to level to level. Sometimes if the fib levels from both swings don't work, and you're looking at these fib levels, which for me, I'm not clear that that's what the market is looking at either, don't work, then I kind of don't lean on them, and I just watch the price action to make sure that we keep going higher. But just like Solana, we could draw this as a parallel channel, and we could look for the third touch if we continue higher to be a breakout. We haven't reached there yet anyway you draw this. But again, this is another one to watch closely, because the broader market, if it turns, will pull this one down as well. So let's look at some of the others that haven't made quite such bullish patterns that I was watching for. And one of them is Dogecoin. So in Doge, when we had this lovely rally at the weekend, Pepe kept going. Doge unfortunately didn't, and gave us a bit of a swing failure, double top, and then this nasty shakeout yesterday took us back to the bottom of this sideways range like this. So here we are in a choppy sideways range. It's not for me quite the same clear bullish pattern, but it is, you know, if we look at it as this, it is a simple ABC. It's just flat and sideways, right? So for me, this one's going to go too if we can get above the daily 20 moving average. And if we can't, we are likely to see a little bit of a bigger pullback, because and we need to watch out in Doge that it's not a much bigger pullback because of this kind of potential double top pattern. We could go twice the distance of this zone in a bigger pullback. So watching the price action here, this isn't one that I bought. But if one goes, they kind of all go, if you like. And the reason is I couldn't my next upside target in Doge wasn't that far away. It's at 0.5, whereas in Ripple and Solana had kind of better, longer, bigger targets, if you like. So one other chart that I kind of liked that was trending higher and just made a little bit of a shallow pullback yesterday. Let's take a look if I can find it. had got all the charts ready that I was going to look at today. Pepe is still really outperforming very well, but one that was can't find anything tonight. Let's look at it again here. One of them that was performing very nicely was AIORs. Let's look at it on Coinbase. So if we look at this one on Coinbase, this was a textbook ABC equal measured move back to the daily 20 moving average. If I go out to the weekly as well, I liked how this one was holding a new high above the March highs, and I kind of liked how this looked like this was a potential wave 4 for another swing higher. So this was another one where a textbook equal measured move, when you have that, if you draw a fib retraces over both swings, as soon as you get above this 236 fib, you're likely to see a bigger move, and this is what this one is doing. So we've seen a really nice blast off the lows. I think that we should at least see another leg higher here. So I'm watching the pullback in this one, and a pullback into these 4-hour moving averages, or the hourly moving averages. There's a good look here, and another swing higher. The first target, just like all of the others we've looked at tonight, is kind of going to be a third touch of this trend line highs, if you like. We could sometimes, when I'm not sure of the angle, they work best as a parallel channel, as any Elliott waver will tell you. And so I go to the high like this, and there we go, and put fib levels and look for the overlay. And when you think you've got a big ABC, your first fib, or the most common fib retrace target, is the 786, which is up here at 1.249. So in this one, we should at least see a pullback from here, and then another swing higher to this 1.249, and a breakout for me would be above that for another swing higher in AI. So not everything looks terrible. Yesterday we looked at Ape and some of the NFT coins. Ladies is still doing very well from a very nice equal measured move bounce in that one as well. There was an announcement today that a couple of coins that we've been following got some listings. Goat and Fog got some listings. Let's take a look at Goat first. Now, I'm being a little bit cautious with this one, because when I look at this lovely rally, clearly that was a very nice equal measured move, but this pullback, it's not quite clear to me in Goat that this is complete. And if I look at the fib retrace levels and see how these are working from this high, and I think that this 236 fib and the 38.2 and the 50% was working. And so for me, this was a very nice bounce from a 61.8 fib retrace at 0.55. When you bounce from a 618 fib, you need to hold above the 50%. That's the pivot level in the middle. And if we go left in this coin, you can see, this is Goatius Maximus, the AI one. You can see that this is the very clear pivot level. So for me, getting above and holding above 0.7118, that's going to be confirmation that we've bottomed. And you can see that these previous levels, we're still going down unless we can bounce above it. So above that level, I think we have more upside. When you bounce from 61.8 and you get above the 50%, first retest is the 38.2 at 0.86. And then if you get above this level, normally sometimes you'll go back and forward in this sideways range. So it wouldn't be surprised to come back and retest this 50% in a maybe continuation inverted head and shoulders pattern or something like that. And then the second target above this high becomes the swing. We measure the first swing, project it from this low, and we look for a measured move like this. So from this low to this high like this, that gives us a target up here. And if the fib levels aren't working, again, I usually bring it back to 0 and see if they kind of work a little bit better. So that means if we can hold above 0.71 and trade above 0.866, our next target would be up here in 1.3, and then that would be the first bearish target. And then if this is a wave 1, 2 and a wave 3 underway, then obviously we look for bigger targets. The equal measured move at 181, and then the 1.618 of this first swing up here at 2.61 for goat. That's what I'm looking for. But key to a bounce here, just like a lot of these charts, excuse me, that are at resistance tonight, this 0.711 level is going to be key. And the same fork, I actually kind of like this correction a little bit better, mainly because we've got this lovely double bottom. But if we go from the lows and 0 in FOG, so it doesn't matter what we did before this, to this high, you can see that again these fib levels have worked really, really well in FOG. We've bounced from the 61.8 with a double bottom swing failure pattern down here at 0.29, and so the level that we need to close and hold above if FOG is gonna move higher is this pivot level in the middle here at 0.3839. Above 0.3839 we get back to the top of this range and we look for this 0.3839 level to be support, and then so this is our first target up here, and then our second target would be measure this swing, or from 0, project it from this low, a retest of the highs would be our next target, then 1.06, and then 161.8 at 153, and if we get a really good wave 3 obviously, or 2.3. So FOG is definitely cuter than GOAT, I gotta say. So one trade that I did take last night was Chill Guy, and the reason that I did Chill Guy, let's see if I can, was basically just because of a measured move. I did Chill Guy and Bonk, and I can't really on my chart, so let's talk about Chill Guy, and I'll explain why on a clean chart, which is okay. So no matter where this one came from, or let's put regular candles on, whether it came from 0 or here, whenever you see this lovely 3-wave pattern like this, then it's really interesting. This one is even more interesting because if I measure from this low to this high, we can see that this was a Gartley pattern. And the reason is the first bounce was from a 61.8 fib, and the second bounce here was from a 7.86. So we've got the same rules in play. Had a really decent bounce in Chill Guy, but this 61.8 having bounced from this 7.86, we need to close and hold above this level. Let's put it on the right where you can see the prices. 0.399. It closed and hold above 0.399 because we're reversing at this big Gartley pattern. 7.86 fib level gives us a first target here of this 38.2 at 0.514, and then the second target we use to measure from this swing, first swing, low to high, up here at 0.56, and then the equal measured move, new highs at 0.74. Now this one, I went from this low on this MEX chart, but actually if we took this down to 0, we still have a pretty bullish pattern here. If we take our fibs down to 0, because it's, you know, electronic money, we still have the same bullish pattern. We've bounced from a 61.8. This level that we need to get above in the middle is the 50%. Our first target's actually going to be these highs here and the 38.2, and that equal measured move target next is 0.63. So either way you cut it, whether you measure from 0 or here, the key decision level is 0.399 one way or 0.4 another way. That's what Chill Guy needs to continue above if this is indeed a bigger bullish reversal and this lovely big 3 wave correction is over. So I'm looking at that one, and I did a little bonk too. Now, like, they're all pretty much the same, you know. I think if they're all going to go, or they're not, and so you need to manage your risk accordingly. Now this one, the first target I had for bonk when we broke out of this tightening up consolidation was based on the measured move from the low in January. So I measured from this low to high, projected it from this, so we did a 3-wave correction, very nice, projected it from here. Here was our first target. When you reverse an equal measured move, which we did here in bonk, you need to hold the 61.8 level and the breakout level on a back test. Now so far this is a weekly chart, so we've had 3 weeks of dojis after a really strong up move. So this is corrective, indecision, sideways, back and fill consolidation if you like, and I will still like this on the weekly as long as we don't close Sunday below 38.96, and actually I'm looking for this to be a 3-wave correction and another swing higher. And the reason is, from the low at the beginning of September, I think this is a wave 1, 2, really strong wave 3, wave 4 pullback, and I'm looking for the next leg higher. And very often in crypto, the 5th wave is the strongest. So my first target, if this launches from here and this 4-week correction is over, the first target would be 77.63, and the second target would be up here at 11,630. So on lower time frames, the reason that I thought that this potentially had a really nice reversal going on is if I measure the first swing lower, high to low, here's our 3-wave correction in the middle. So first swing, A, B, C, second swing, we bounce from the 61.8 here. Okay, but because we've got this bigger resistance level that I wanted to hold, this is kind of our bull bear line, if you like, in the middle here at 4,000 in bonk. Back above this 4,000 level, I think this 3-wave correction will be over, and I'm looking for this next long setup. But we might, you know, sometimes bottoms take time. They certainly did here, and we could do this here in bonk as well. So I'm tentatively long at the moment. I'm wrong obviously if we close underneath this 3,500 area and this daily 50 moving average. And again, keep an eye on all of them in the broader market, because they all kind of float together, and so be careful out there. But those are the ones I'm trading. If there's one you're trading that you'd like me to look at, let me know.